And Mr. R.K. Goyal, MD at Kalyani Steels, now joins us. Sir, if you could just tell us about the Q1 numbers. It was largely because of the MIP that has been restricted here in India, because of which we saw the numbers recovering or seeing such a strong growth.
Good morning. You see, as far as we are concerned, MIP is applicable on engineering steels, what are produced by us. But at the same time, we could improve our volume substantially, more than 15%, and that has helped us in improving our margins. Besides that, we could further reduce our cost. So that has really helped in improving substantially good performance. And but then it is yet to be seen whether MIP will continue, it will not continue. More and more products will start coming to the country, and what will be the impact of the same in time to come.
Right. So, as far as the overall volume or the price pickup is concerned, do you think even ex MIP pricing would have gone up because pricing globally has seen an uptick?
You see, as soon as the MIP was introduced, there was an increase in price within the country as well as globally. But subsequently, prices have started falling down, whether it is for the raw materials for manufacturing steel or steel products. Major surge was in China. Now the prices have already come down there, and same thing in India. The prices are coming down.
Right. What are the current prices at these levels? Say if MIP were to go away, you think that you at a break-even level you would be able to compete?
You see, as far as we are concerned, MIP is not applicable. It is largely applicable on commodity products like hot rolled coil, TMT bars, and many other products. On our products, there is no MIP. So as far as we are concerned, we will not be affected, except like if many other products are coming to country, some more of engineering steel start coming to the country.
Right. So overall, the operational efficiency, can you just talk to us? One was about the volume growth which led to better operating leverage. How did you control cost, or what did you do in terms of raw materials?
You see, as far as we are concerned, we have a tremendous focus on conversion cost, whether it is energy, whether it is other consumables, whether it is productivity, whether it is production volumes. We had focused heavily on that, and that has helped us in improving the performance.
Right. And how will that continue?
I'm sure it will continue, but for the negatives which may be there, like the increase in raw material prices or the pickup in market which is expected in this quarter and next quarter, if it doesn't take place, then it will definitely affect.
Right. As far as raw material cost is concerned, do you think from going ahead or from the next few quarters, once you have the low-lying inventory which gets depleted, the raw material cost would go up, so margin expansion or margin may actually drop going ahead?
You see, it is quite uncertain. We are watching very closely. We expect on one hand iron ore prices to go down as globally the prices are going down. But what NMDC does, whether they reduce the same prices in Karnataka, what they have done in Orissa, that is yet to be seen.
Right. Could you just tell us the EBITDA per ton right now and the realization per ton for the quarter?
EBITDA margins are around 25-26%, which means it is close to 10,000, 11,000 rupees per ton.
And realizations?
Realization will be around 44,000-45,000 rupees per ton.
Right. So, if we assume that iron ore prices which have already gone up, which would start coming in this quarter or maybe the next quarter, you think out of this 10,000, at least 3,000-4,000 would get away into iron ore?
No. If prices will come down iron ore, then it will be only a couple of hundred rupees. But at the same time, there is a likely increase in coke or coking coal prices.
Right. So the other prices coming down will actually negate the impact.
Yes, that's true.
Right. And availability of raw material, that was an issue about 6 months back. But right now, when prices were low, availability was not a big issue.
You see, there was a problem in May, June, that coke was not available. There was because of the big surge in China. Now availability has improved, but the prices have also gone up.